Hello everybody. So today I just wanted to review some of the charts and some of the delivery we had upon 9:30 open and the reversal at the highs that led to the opening range low. Okay, these are some of the reversals that we look for every single day in the marketplace. So after you grow as a trader and are able to identify these signatures in live time when you are trading, all that's really required is your patience. Okay, so of course technicals are extremely important. ICT concepts are extremely precise. Okay, all we have to do is wait for the correct order flow, the correct time of day, the correct signatures to really frame a trade and build our narrative and pick our spots, particularly if we are executing on the 1 minute time frame. Okay, so let's get into it. We're looking at NASDAQ's 1 minute chart here. It is Friday, August 23rd. And today we had 10 a.m. red folder news. And as you can see, after 9:30 open, we really had some consolidation, some choppy action. Now, as a general framework, as a general rule of thumb, your best short entries are going to come above 9:30 opening price, okay? 9:30 opening price, midnight opening price, the same logic, Sunday opening price, okay? These are key time levels that you want to utilize in tandem with the price signatures that you are using to enter a trade, right? To frame your narrative, okay? To target your liquidity. You want to see price go above those key levels when you are bearish, and then see your setup start to form above those key levels. Okay, so in this case, we're looking at 9:30 price. Sometimes it'll be just based off the structure for the day or the week, above 9:30 opening price and midnight open and Sunday open, right? Sometimes price will only dip above 9:30 opening price, but not reach all the way up to midnight opening price. Okay, I'll talk about this more within our Discord. So if we do have a bearish bias, we think that the draw on liquidity is lower, and we think that we're going to seek discount inefficiencies or discount liquidity pools, right? Sell side liquidity pools. We want to see price, like we mentioned, go above that 9:30 opening price, that key level of time. What we also want to see is as much engineered sell side liquidity left while the manipulation is occurring. While price is expanding above 9:30 opening price, we want to see as much sell side liquidity, right? We want to see session lows in close proximity. We want to see relative equal lows. And then all we are doing is waiting to see if we do in fact get our setup. If we do get our entry model after our manipulation has taken place. So again, we're on NASDAQ here. If we're waiting for a short and price is going above 9:30 opening price, we still have to wait for the setup. If price just kept expanding higher, yes, you could say you missed out on the long, but you still followed your plan and your daily bias and where you thought the draw on liquidity was. Okay, so just because we go above 9:30 opening price, of course, by no means implies that we just hammer short and every single fluctuation lower in price we chase. We still have to be patient and have more of a sniper's mindset and wait for our entry model to form. Okay, if this thing expanded 100 points higher without me, I don't care. If it doesn't make sense to me, I'm not going to take the trade. I'll review and I'll try to understand why I got the bias wrong. Okay. But if we do see manipulation and we do see the signatures in price that imply a turning point in the market or a reversal, then we can start to really say, okay, I think my bias is correct. I think we're going to go down and get the engineered sell side liquidity pool or whatever your target is for every setup every day. So if we're talking about NASDAQ here, we have consolidation ahead of 10 a.m. news. Okay. And see how right at 10 a.m. they're using that red folder news to inject volatility into the market against what really occurred after that manipulation took place. So you guys know this, but the economic calendar, and particularly red folder events, is utilized to be a catalyst for that manipulation. Okay, so a rule of thumb that most traders I think should follow is to not trade ahead of 10 a.m. news or ahead of, sometimes we have 9:45 news. Okay, you want to be as patient as you can be. Okay, and of course, the closer you get to that news event, you really don't want to be in a setup. You want to wait for that manipulation because you know, even if you get the draw on liquidity correct, with that news, sometimes it can be so volatile and it's more likely, because trading is a game of probabilities, it's more likely to stop you out and then go wherever it wants to go, even if you're right or if you're wrong, right? It's more likely to take out your stop and then expand. So what are these signatures of a reversal? A, price is above 9:30 opening price. Check that off the box. B, do we see engineered liquidity? Yes, we see internal engineered sell side liquidity here. These two relative equal lows, this 1 minute 10:06 swing low and this 1 minute 10:17 swing low. Beyond that, we see relative equal lows down here. Okay, and even right here, not annotated, those are important as well. And we already mentioned that the basic premise is that we want to see as much engineered sell side liquidity left behind while that manipulation is taking place. We're just waiting for our setup. Now, on top of what you see here, not just these being relative equal lows, but the opening range low, right? That is a session. Okay, so the opening range is 9:30 a.m. to 10 a.m. Eastern time. You want to look for the lowest low in that time if you're bearish, and that can be a target. And it's a target a lot of days in a lot of these setups. But if you see these relative equal lows falling short of a session low, you bet your bottom dollar price is more than likely to return down there. You just have to wait for the setups. So we see price come up one last time at 1028 and purge this high. This is your Kraken correlation at the highs. This is your SMT between ES. So we'll look at ES after. But while the S&P was failing to make a higher high, NASDAQ, as you can see here, did in fact come up and purge the high once more. This is your Kraken correlation, and I'm sure most of you guys know this, but if you are new, and just to reiterate for you seasoned traders, SMT is so powerful, right? Do I require it in every single one of my setups? No. But is my confidence extremely increased when I do see the SMT and then my entries? Yes, yes, yes. So we see the SMT, that's step one for a reversal, right? Now we're trying to see what is going to occur next. Is that SMT going to hold? Well, what do we see after this? This 1028 candle is important to me. Why? It's an up close candle after an SMT, right? In RTO all the time, we classify this as a high probability bearish order block. Price closes below it, and see how it's using the very bottom of that high probability order block and then pushes price to accomplish something else that is significant. Okay, what is significant? This BISI at 1023 was utilized to send price higher. Once we close below it at 1032, that classifies that BISI as a high probability bearish inversion. And it's simple logic. It was used to push us higher. Now we close below. The bodies tell a story. Once we close below, if we are bearish, we want to see that high probability bearish inversion push price lower, okay? And by extension, you of course want to see it close above the inversion. In this case, we technically do have a breakaway gap where price failed to reach the high of this. It did come up very close to the high, right? I've talked about this in other teachings with the breakaway gap anticipation. It's on the YouTube channel in the ICT concepts playlist, okay? But any inefficiencies above a high probability bearish inversion, you want to see remain open. That is your confirmation when you're internalizing your order flow that price is weak. It doesn't want to go up there for those inefficiencies, and you should expect and want to see that in relation to these high probability bearish inversions. What do we see here? Close below it. Look how it comes back up into it. Yes, it wicks above and then expands lower to the engineered internal sell side liquidity and the engineered sell side liquidity, which is also, as we mentioned, the opening range low, which is what we want to see in relation to those session lows, as much built up liquidity near them as we can. Okay, so let's take a look at the S&P, and it's very similar, so we'll go a bit quicker here. Again, we want to see price go above 930 opening price and then hunt our reversal signatures. So we just saw NASDAQ make that higher high. ES here is failing to make that higher high. And just like NASDAQ, see how right after we get below this 1028 up close candle, we're working the lower portion of that, and then it's sending again us back down below this BISI here, right? The same 1023 BISI utilized to send us higher. It does purge this swing high here and this swing high here, but the SMT holds. So once we close below, this is your high probability bearish inversion. Of course, you see ES did not reach up into this, okay? But if it did, just for learning purposes, just for review, I would want to see that, just like NASDAQ did, reject price lower. And I don't want to see price go above there, right? So after we close below that high probability, or technically the BISI here, and it becomes a high probability inversion to me, that's how I'm internalizing it. I want to see, like I mentioned with NASDAQ, any inefficiencies above remain as a breakaway gap. And we've spoken about this on the channel before, and we see this time and time again within the group, literally live, review, whatever it is, right? The dance between high probability inversions and breakaway gaps is so useful for stop loss trailing, for just your narrative on the higher time frames. It's applicable, okay? So after we close below here, of course, like we mentioned, we didn't get this retracement back up into it if you're looking for an entry there. But let's say you were short on the high probability bearish order block, right? And your stop loss is above the high. Once we close below this high probability inversion, that's giving you the luxury to start to trail your stop to even. Because if your entry was at the low of the high probability bearish order block here, okay, and using the logic we've discussed here, you want to see this inefficiency remain as a breakaway gap. So by extension, you don't want to see price get up to the order block again. So it's giving you the freedom, right, the comfort to say, okay, with logic that repeats all the time. And if you guys are new to the channel, just go through the ICT concepts playlist, or just join the Discord. Okay, we see this day in and day out. It is a beautiful dance. It's beautiful to see, but all we have to do is wait for these signatures. That's all you have to do. Okay, yes, there's a lot of things going on, and it's not always going to be the best setups. It's not always going to be the cleanest algorithmic signatures. Okay, but when it is, you're sitting there waiting to strike, right? And you're not scared because you didn't take all the lower probability setups that did not make sense to you, or you just wanted to enter a trade impulsively because the market was open and it was moving around and you were bored and you felt like you wanted to make money or get a dopamine hit and feel good. Okay, you're not taking the bait on every single fluctuation in price. You're waiting for high probability, clear algorithmic signatures where you can say, okay, I want to see this occur. I want to see this remain open. I want to see us attack the engineered sell side liquidity from the narrative that I have built. Okay, so you're not greedy with, every trade you take in terms of I'm holding this for 1,000 points, but you're greedy in terms of what you demand from your high probability setup. Okay, I tweeted this the other day, but most people can get a pretty good idea of where price is going to go directionally, right? Where the draw on liquidity is, where it is probably going to head. Okay, the problem is that most people can't control themselves in between those high probability setups, right? They're so eager, right? And their intention may be great, right? But they're so eager to get in. They love trading. They're looking forward to trade. They know how good it feels when they take a good trade and have a winning trade that goes right to their profit with minimal drawdown. Okay, but that doesn't give you the excuse to take the low probability setups. So once you can combine your technical skill set and your ability to read order flow and read price, all you have to do is remain patient. Okay, you're gonna have losses. I have losses all the time. You just have to be patient and be objective and not go on tilt after a loss, and understand that sometimes it's inevitable. You're going to have losing trades or losing days or back-to-back losing trades. Okay, but you need to follow sound logic. You need to be responsible with the risk that you allow in your trades. You need to not adopt the mindset that your trading is made in one day. Your trading career is a large set of sample size, right? Regardless of if it's a win or a loss. If you win, you don't get too high on the highs. If you lose, you do not get too low on the lows. You just focus on the next opportunity. That is what you are as a trader. You just try to make the best decision and manage your risk. So again, not only in this video today, not only if you guys are in the calls in the Discord, the setups and the delivery and price and what ICT has blessed the community with, it's beautiful when you see it. It is so beautiful. And by no means I'm not negating the importance of being able to read price and being able to see a setup and being able to see these kind of more advanced signatures as you progress in your learning. Okay, we're not negating the fact that that is important at all whatsoever. And when you see it, it's beautiful. Okay, but there's going to be times when you simply just get it wrong. And you need to walk away and be patient and understand that there's going to be more opportunities later today, tomorrow, next week, right? Whenever they're going to come, you're waiting to strike because you trust yourself and you know that you can identify those high probability setups. I know this YouTube channel has been quiet for a bit. We've been working on a lot of things behind the scenes, and we are very, very excited to share them with you guys. So just hold tight, stay tuned, and I will talk with everyone soon.